Hey everybody, this is Jim at SP500chart.com. It's Sunday afternoon about 2:30 on April 17th, 2016. And just want to take a look at the chart, see what happened this past week, the week that ended 4/15. And in the process, see if we can get any sense of where we are in relation to, well, a couple things. For one, we had a target of 2090. Did we meet that this week? Well, we'll talk about that. And where are we in the big picture? Before we take a look, I need to remind you, as always, that the website and the video are for educational purposes only. Nothing stated at the site when the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Starting out here on a daily chart, just so you get a little bit of a sense for the bigger picture here. Over the past year and a half or so, actually we can just look at it over the past year, we've had two areas where the S&P got up significantly over 2,000. The first time we hit 2130, the low 2130s. Second time we hit the 2117s, and now look at this line right here. We are very close to tagging this line, which at this particular point in time is at about 2095. I think this line should be considered resistance. So we're very close to coming up upon a line that has historically created a problem for the S&P. Now, that doesn't mean it always will create a problem. It just means, because this line has a history, it means we can use this as a diagnostic tool. Okay? So in other words, what do I mean by that? Well, it's not predictive yet. Right now, because we're under it, if we were to get over it, then that means the market is ready to forge ahead and to, in almost very likely, extremely likely, to forge ahead and set a new all-time high. But until that happens, we can't use it to predict that. All we can do is say, if we get over this, the moment we get over it, then we diagnose the market as saying, good, we're in a very healthy situation. Depending upon how we interpret what happened underneath this line over the past year and a half or so, we may make a call that where we can then use some of this other information to create another upside target in much the same way we did with this double bottom down here. Remember, we had two bottoms, then we had this little midpoint line around 1947. Once we got over that, we looked and we measured the depth of that right here, added it on to where we got over it, and that created a target of about 2090. Did we make that target this week? Well, we did not hit 2090. Okay? So if you're gonna look at it and say in fine writing that that we did not make 2090, you're free to do that. But we instead got to 2087.84 according to the BATS exchange data, which was about 0.1% from 2090. So I'm saying at this point, for all practical purposes, that target was met. Okay? So what happened this week? Well, we started the week out inside of a descending channel here, or possibly a symmetrical triangle, with this being the support line. I cannot tell you which of these to believe. You have to decide for yourself which it is. Truth be known, it could be both. It could be this is a descending channel, but it's also part of a symmetrical triangle. Well, here's where the symmetrical triangle becomes important. If it's a symmetrical triangle, then we've got a target of about 2100, 2103 or so. Because that's the height, again, the same principle, that's the height of this pattern from where it had its first complete turn inside of it. So that's why that line is up there. So anyway, we started the week knowing that we were in a slight downtrend that started after we made this nice strong move from the low 1800s, really essentially came up almost straight up out of that. And then we started to consolidate and go sideways a bit. This past week, we decided to call this either, again, like I said, either a triangle or a bull flag. We got over that bull flag starting on the 12th, and then we continued to be over that for the entire week. So that means two things happened. That means A, this was a good call for the bull flag. Again, it's not confirmed until we got over that, but when we started to get over that on Tuesday, we issued the alert that we may be in the process of a breakout. This alone did not constitute it. We really didn't get it until Wednesday. But then look what happened. We get up, we move up nicely, then we start to make a small ascending wedge right here. And that means probably this move up was starting to lose some steam, and indeed on Thursday and Friday we actually traded down just a little bit. But I've got no real serious sense of where the S&P may go this week. I think it wouldn't surprise me if we saw some further weakness. We could come back and back test this line. We could potentially find support around 2060 where we gapped up from on Wednesday. Or we could even be forming another channel that's going to now use this line as its resistance. Whereas before this was support, you can see once that broke, it has now been resistance for about the past 6 days. So where we are right now is we're sort of at that point where for all practical purposes, we've met a target. So there's no pattern that I can point to and say that's the wind at our back that should be taking us up to 2090. We just don't have that. That luxury is now gone. Instead, we're just looking at it now with the chart, rather than being predictive, being diagnostic. And what I mean by that is, if we get over this green line here, then we will have at that point something predictive to say that, and I mean a significant prediction if we get over this green line. How significant? Well, if we get over that green line and we end up looking at this whole thing as let me back out a little bit longer, to where we look at this whole thing as some type of large consolidation pattern for the past year and a half or so, then we could be looking at a target that is in the mid 2400s. So we're talking about from here at about a 16 or 17% gain from where we sit right now. I'm not saying we're going to be poised to do that at this exact point in time. As a matter of fact, it wouldn't surprise me if we come off of the 2090 or 2100 area, wherever this line is, if we were to slide back to the mid 1900s again. That would not, should not come as any surprise. But again, I've got no clear reason to say that, other than if it were to happen, it wouldn't surprise me. So the moral of the story this week is 2090, after talking about it for weeks, maybe even months, we have now met that target. This line now appears to have been turned into resistance. And where we go from here, we've just got to let the chart now show us that next signal, because nothing that I can see to the left of where we are right here speaks with any great assurance on where we will likely end up in 2 days, a week, a month. All I can say is this is likely to be encountered as resistance. And if it is resistance, it could be based upon what we've seen in the past. Again, going back to that daily chart, here and here. If this line does create resistance, the past 2 times we've hit it, it has created significant resistance. I mean, look at this and this. So if we were to get something maybe a little bit less extreme, then this could be the setup to a continuation inverted head and shoulders pattern. Or there's some other patterns too. And let's not lose sight of the fact that a failure to get over this line and then extreme weakness to take us down back into the 1800s, that would then call the whole idea of seeing any new highs in the foreseeable future into question. So for right now, we're near resistance. I think it was a good week. We spotted little patterns. We saw the fruition of big patterns. So, but as I mentioned, the moral of the story right now is we have to let the chart now reveal something else to us other than probable resistance here. So that's really all I got to say as far as predictive. Is this green line probably going to turn the S&P back? But if it doesn't, then we got another call to make, and that would be for a new upside target. So guys, I got to head out of here in just a second, so I'm going to let that be the weekly review in the video for last Friday. And as evidence of the fact that I've got to be out of here in just a little bit, it's almost 3 o'clock. This video may not get posted until 10 o'clock or 10:30, maybe even 11 o'clock tonight. So if I can't ask you to be patient now because it will be after the fact. So I'm going to go over to the website and just let you know. So anyway, hey, thanks for watching. Take care and thanks for your support.